Good afternoon and welcome to Business Incorporated. We're live to you from Channel's global headquarters here in Lagos, Nigeria. I'm boosting them off on you. Let's get started. The Central Bank of Nigeria releases the 2016 Financial Stability Report, stating the banks and the financial system still strong and resilient. Meanwhile, the United States raises its import duties on Chinese steelmakers by more than 5 times. Plus, Japan's economy dodges the recession bullet, growing at an annual pace of 1.7% in the first quarter of 2016. We're starting from Europe, where the London Stock Exchange Group plc and the Deutsche Börse will publish shareholder documents relevant to the planned merger next month. The LSE shareholder meetings required in connection with the proposal to combine the exchanges groups will take place in July, after UK citizens vote on Britain's membership of the European Union. The deadline for Deutsche Börse shareholders to accept the offer will also be in the month of July. Next month's release of the documents is subject to approval by German and British regulators and the boards of each stock exchanges. Shareholders and authorities in both countries will be paying close attention to the outcome of the UK referendum scheduled for June the 23rd, as the companies attempt to build a bridge between London, the world's largest financial marketplace, and Frankfurt, Germany's banking capital. The United States has raised its import duties on Chinese steelmakers by more than 5-fold after accusing China of selling their products below market prices. The tax is specifically applied to Chinese-made cold-rolled flat steel, which is used in car manufacturing, shipping containers, and other construction. The U.S. Commerce Department ruling comes amid heightened trade tensions between Beijing and the United States over several products, including chicken parts. U.S. and European steel producers claim China is distorting the global market and undercutting them by dumping its excess supplies overseas. Look at how the markets finished today in Asia. Japanese stocks closed little changed after data showed the economy dodged a recession bullet, growing at an annual pace of 1.7% in the first 3 months of 2016. The better-than-expected growth came after higher government spending helped to offset weakness in business investment and exports. Japan's Nikkei 225 benchmark stock index fell slightly to 16,644. The broader Topix index was higher 0.2%. Other stock markets in Asia were lower ahead of the release of the U.S. Central Bank's minutes of the last meeting later today. Investors are looking for guidance on what and when the Federal Reserve's next move is going to be. By mid-afternoon trade, Hong Kong's Hang Seng and the Shanghai Composite were about 1.5% lower. Australia's S&P ASX 200 index fell 0.75%, while South Korea's benchmark Kospi index fell 0.6%. And yesterday was the big day today as far as inflation was concerned from the world's #1 economy, the United States. European markets reacted negatively to that, but let's see how the markets pacing out today, not with the news from the London Stock Exchange and the Frankfurt Stock Exchange, Deutsche Börse. So we're live to you now, crossing over to Frankfurt. Javier Agueda, DWTV financial correspondent, the exchange there live to us. Thank you very much. Javier, thanks for coming through on the program. European markets in the news after the U.S. consumer inflation data. How worried are investors about this latest economic reading from the U.S.?
Well, of course, investors tend to react quite sensitive to any type of news that suggests that the U.S. economy is going strong or stronger than expected, because it means that we might be ahead of a further increase in the interest rates that might come our way in June. That's what investors are fearing right now, and that's what definitely caused some losses yesterday that we saw, at least here in Frankfurt. Now, the reason for this is that despite the fact that we know that the U.S. economy is growing a little bit, well, the market is simply just not prepared for another interest rate hike, especially because the first few results of the economy in the United States at the beginning of this year were not that encouraging. So at this point, there is a lot of uncertainty. That's why everyone is paying very close attention to any statement coming from Janet Yellen, the head of the Federal Reserve, or any member of the Fed, because everyone wants to know where this is heading to, and it is quite difficult to find it out. And as we know, when there's uncertainty, the markets and investors are not really happy. That's why we are seeing a lot of instability right now.
But what does the markets or investors think, as far as the equity side is concerned, from your side of the Atlantic regarding the euro trading weaker on the greenback, the US dollar?
Well, normally when the euro is weaker against the US dollar, that is good because that means that prices of products that are traded in euros, that means all the products that are produced in the eurozone and here in Germany, for example, are cheaper to buy for foreign customers. So that usually gives a boost to the exporting companies, many of which, as you know, are listed here in the Frankfurt Stock Exchange. So that's the normal case. But nowadays, or today at least, that is not happening. The reason for this is that we have one sector that has been severely hit, which is the automotive sector. As you know, there are many scandals unfolding in many different car companies. First, it was Volkswagen, VW. Now we have the recent developments at Opel, another important German car maker. Today we found out that Suzuki also somehow cheated in their tests, or at least in the way they performed the tests. So the Japanese car industry is probably also going to suffer. And let's not forget that the auto industry is the backbone of the German economy. It's one of the most important industries. And it's not only the big car makers, but also the smaller companies that deliver different parts to those automakers that might also be affected. So that's why, despite the fact that the euro is somehow supporting exporting companies, since the backbone of the economy is being hit right now, we're not seeing that much of an impulse in the German stock market.
Finally, Javier, do you think investors believe that the current oil price rally is a bull or a bull trap?
Well, that is very hard to tell, and it depends on who you believe. The fact right now is that oil prices have been influenced by two important developments. One is the crisis, the economic crisis in Venezuela, which leads many to think that the country is not going to be able to sustain their oil production. And the other one is the situation in Canada with the fires that have also reduced the oil production. So those two aspects have been one of the most important reasons why we are seeing this apparent stability in the oil prices. Many say that it is here to stay at least until the end of the year. But of course, the global overproduction of oil has not stopped. We still haven't seen an agreement between the most important oil exporting companies to reduce or somehow limit production. And that means that next year, in 2017, we will probably be confronted with the same problem that we had at the beginning of this year, which is a massive production of oil with not necessarily higher demand. So there are voices saying, there are some voices who say that we're going to see the oil price reach an all-time high again. Some say that they will drop before the end of the year. So it's really very difficult to tell. But I would say the safe bet is just to stay with the near developments and with the developments on short term in order to see how this is going.
Javier, hold it by the tail. That's how to hold it there, isn't it? Thank you very much. Let's go the bull that way. Do have a great day. The rest of your team, DWTV financial correspondent for Channels Television at the Frankfurt Stock Exchange. When we return, we'll come back to the stock exchange. Nigerian authorities seem to have found a way to join the global going green conversation. It's via the stock market. Let's talk about that after the break. Let's share a few minutes on that.